My mission with the Mortgage Report is simple: to save you money. I'm here to provide weekly insight into the market so you can make the best buying decision. I want you to know where interest rates are headed, and I promise to let you know my lock or float position. The Mortgage Report starts now. Hey, what's up, BobMortgage Nation? This is the 82nd episode of the Mortgage Report. Now, the Mortgage Report is something I'm delivering to you guys on a weekly basis that's giving you an insight into what happened in the markets and allowing you to see my prediction as to what I'm doing with either floating or locking interest rates, what I'm advising my clients to do. Now, this is a weekly report, so if you want daily details, go follow me on Instagram. Just search Bob Mortgage, and then in the stories, I'll give you updates as to the market, what's happening on a daily basis, if my the services that I'm providing and what I'm telling my clients is changing from a float to a lock or from a lock to a float. Okay, that'll happen on a daily basis. All right, so as of Friday, the stock market closed down. Now, it was down mostly because we were looking at some of the ongoing concerns around the government shutdown, and then we had the U.S. and China trade relation, just concerns that still exist from there. Now, we also got some CPI numbers, which is what measures consumer inflation, and we actually saw a drop in December of 0.1%, and then year over year, we're actually seeing inflation drop from 2.2% to 1.9%, and that's mainly related to the drop in oil prices. Now, this coming week, we have some new construction news that's going to be coming out. Not sure it's going to be really a market mover, but we do have to watch it nonetheless. Now, if we look at it from a technical standpoint, if we get to the charts, let's take a look at where we are, because you guys have been following me. I've been telling you how great the market's been. Yes, we've started to see the market over the course of the year be down in interest rates, but if we look at what happened in November 8th, all the way through where we are right now on January 11th, we've seen interest rates decrease, even though the market was saying that we've had an increase in interest rates over the course of the year. It's been a really good month for us. Now, if we look at the technical side, we're sitting here at 101.86 basis points. So we're in a really good place right now as it relates to this coming week and going into next week, because this floor right here, this floor resistance sitting at 101.86 has been a really good floor, and it's held every time we've tested it. Now, the thing is, we have a nice run. We have a big gap up here that it has the opportunity to run up to 102.618, okay, until that next ceiling. And we have fears, still over the continued government shutdown, and we can continue to see bonds gain ground right here and go back up to that ceiling level that we were getting up over here on January the 3rd. So going into this week, I'm going to stay in a continued floating position. I feel the markets are in a really good place right now. I feel like we could experience a nice sideways trading range with some potential upward movement in the bond market towards that next level of ceiling. So I'm still advising my clients to continue floating on the interest rates. Look, I've been a mortgage advisor for over 20 years, been blessed to provide financing to over 25,000 families during that time period. We work daily to make sure we can get the right home loan at the right price for you. With Bob Mortgage, your dream loan is already within your reach.